Hey, it's Ken Finnan at Capital Advantage Tutoring. I got 4 likes already. I haven't done anything. Thank you so much. Ken Finnan at Capital Advantage Tutoring. It's my job to get you past the Series 7 and the SIE and the 6 rows and 63, 65, 66. Let's see what happens tonight. I have John, how are you? So don't forget, take a look. If you want to get some materials, go down here. You got Achievable down there. Off the hook for SIE and cheap. You got STC. I got some Amazon stuff. Take it there. Buy some Reynolds wrap or something there. And John, how are you? And what was I going to say? The other thing. Oh, and then if you want to learn how to trade and you want to do a little buying and selling, learning how to read signals and traffic stuff, go check out the Wall Street Global Trading Academy. There's a link in there. It should be there. I hope it is. Who knows? Okay, let's get going. Ginger, how are you? Okay. Boom. I love it. I think it's, you're going to mentor him. Send him my way. Stefano, that's awesome. So I can do that, John. So Fidelity's awesome. I love it. I think they have a good program. They give you a lot of time. They give you some support. And Brandon, who's sometimes on here, he worked there and he trains for them sometimes. So you might end up seeing Brandon. If I don't know if he still does it. He's so busy with the books and it's insane. So you might end up seeing him when I think they do the SIE maybe every Friday or something like that. Okay, if you're part of that program. So, John, that's awesome. Fundamental analysis. Okay. There you are. I was talking. I don't know if you heard me talking about you. The guy did Romanium, Stefano, just started working at Stefan, I think it is. So just started working at Fidelity. So I told him, I don't know if you still do any of that tutoring, that once a week with them kind of thing, but I told him to look out for you. Okay. Okay. You guys can chat. I mean, so basically, Brandon was at Fidelity for a while. He was in charge of doing stuff. And then I think he was in charge of education for a while with them. Okay. So, oh, that's awesome. Oh, there you go. I thought so. So make sure you say hi to Brandon when you get on there. Don't interrupt him when he's teaching, but you know, he's a good guy and he's really good stuff. Sandy, how are you? Okay. Now, fundamentals. So let's talk about fundamentals. So fundamental analysis versus technical. Okay. So technical, and remember, I'm doing the way too fast rundown, like my little shit. The way too fast rundown on this. So technical is like trends and patterns. Julie, how are you? Trends and patterns, like you're looking for like support, which is the bottom, or resistance, which is the top. So like the stock's in a range. Yansky, how are you? So say the stock goes down to 50, up to 60, down to 50. Georgiana, how are you? By the way, Cesar, hopefully he'll come on. He nailed it. He was just telling us on Reddit that he nailed the test. So hopefully Cesar comes on here and tells us how he did. Okay. And how it was. So technical is looking at trends and patterns. You're not actually looking at the actual stock. Okay. You're not looking at the actual stock. You're looking at the price movements and the trends. You're looking for it to cross over. Cynthia, how are you? You're looking for it to cross over and stuff like that. So like if you have a Head and Shoulders, it's like it's technically it goes up a little bit, up a lot, up a little bit. Okay. And then it goes down. And it's technically sort of bearish, but it's what they call a reversal of an uptrend because it's going up and then it reverses. Ruben, how are you? Then an inverted one is down a little bit, down a lot, and then down a little bit. That's a reversal of a downtrend. So it should be going up through resistance. Now, fundamental is different. Fundamental is looking at the actual balance sheet, the income statement, the cash flow, the company, the competitors, the customers, all that stuff. You're actually you're looking at the actual fundamentals. It's the no fun version. Okay. It's boring. Okay. But you'll look at things like PE ratio. If it's a high PE ratio, it's a growth stock. Or you look at earnings per share and changes in book value and all that stuff, which you don't have to go too crazy. Kelsey, how are you? There you go. Okay. It's funny. You said you weren't going to be on here. Rose, how are you? You had a homework assignment. Hope you have some questions for me. Now, because I said the 6 just for you, Rose. So now, fundamental, you're looking at that. So let's talk about a couple of things. They're going to look at the impact of like a dividend. So let's say we declare a dividend. Who declares a dividend? The board of directors. Say we declare a dividend. What's going to happen is our assets won't change, but our liabilities will. Both current and total liabilities go up because we now owe the dividend. So our net worth, shareholders' equity / working capital will shrink because current assets minus current liabilities will get shorter because our assets don't change, but our liabilities kind of go up. So that difference changes. Now, once we pay the dividend, both the assets and the liabilities go down because now once we pay something, we don't owe it anymore. So our assets and our liabilities both go down because once we pay the dividend, our cash goes down, which is an asset, and then it drops. So hit me with one, Rose. I got refunding before you, but and remember, one question, guys, and then you go on to the next one. So now, so when they pay a dividend, the assets and the liabilities both go down the same amount, so there's no impact. And the same thing, that's the same thing working capital. Current assets, which is cash, one of them, and current liabilities, which is the dividend we owe, they both drop at the same, so it doesn't change. Okay, so that's fundamentals, looking at the actual, those things, like the actual inner workings of the company. Remember, balance sheet is assets and liabilities things. The income statement is the flow going in and out. They don't cross over. Okay, hope that helps a little bit, John. I hope that was good. If you like what I'm doing, bang a like. If you really like what I'm doing, fucking share this. All you guys who just got out of college, if you're looking at this, go send it back to your professor, whatever it is, because this is free. I'm not. Look, here's the thing. You want to think that whatever it is, free is always bad. I've been teaching the last 4 days from 9 a.m. to almost 11 p.m. $150 an hour. I make way too much money. Boom. I love it. I make a lot of money, so I'm trying to help out for the people who can't always spend $150 an hour on my tutoring. So I'm helping. I'm trying to be a nice guy. Maybe I'm trying to make up for all the bad shit I did for the last 20 years. Think of it that way. Okay, so now. Oh, Eric, I love it. Congratulations. OID, you must accrete. Little things stick. The acronyms work. Okay. Now, John asked refunding versus pre-refunding. And Rose, get some questions in. Sandy asked me a question I will get to. She emailed it to me. Okay. I will look that up. But they'll never ask you for just a rule number. Wow. Maybe Brandon knows that one. Oh, got it. It's for the holding of funds. I got it. Just so you know, normally they will never ask you to just, okay. Matt, awesome. So Eric, we got a pass. Matthew Lebowski, we got one. I love it. That's awesome. I'm so helped. Which videos? The options one or these? Okay, I don't even know. So that's awesome. I'm so happy for you. And that's the other thing. I'm going to make the pitch. I do the membership. Remember something. There's 3 different levels of membership. There's a $9 one, a $24 one, and then the big one, the $99. The $24 one, every week, every Monday, I do a Zoom call like a lesson, and Sandy's been benefiting from that because she gets she's basically like a one-on-one lesson. But it's not just me typing shit. It's a straight-on tutoring session with up to, however, I think I said I maxed it out at like 5 or 6 people. So that's what the membership does. Plus, you get access to my options videos, which are fucking gold. Okay, so now back to this pre-refunding versus refunding. Okay. Yeah, I just started the membership like a month ago, and I got a few people on there. I love it. Okay, now, no, people don't pass. I mean, that's the thing. Remember something. I'm not tutoring, so I can't even take credit for the passes. I'd love to say I do. Okay, I can't take credit for the passes. I've helped a little bit, but I feel horrible when people miss. But I'm not taking credit for the passes because I mean you're seeing me twice a week, right? So how much can that help? And you're doing the work. Remember, all you guys who passed, so Eric, Matthew, all you guys who passed, you guys did the work. Okay, remember that. Even the ones you just missed, you've done your work. You're just missing. I'm tweaking you up to the top, but you guys are doing the work. I can't. It sounds like I'm being disingenuous by saying, "Oh, don't play." I'm just here helping. I'm coaching you along. Okay, and then if you don't do the work, you're gonna fail, no matter how much you watch my shit. So remember something. You passed. You did it. It was yours. Okay, I like that. Okay, so now Rose, that's a 2, so that's awesome. So hold on for them, and I'll finish those. Okay. Now, Julie, how are we feeling? I hope you're feeling okay. I hope you're feeling okay with this. Doing all this, getting some reading in. Don't stay up late. You shouldn't be. If you're on the East Coast, you probably shouldn't even be on this that late. Maybe after about 20 minutes. Ruben, loved it. Ruben nailed it. Rose, we got it. We'll get into that too. So now, refunding is basically if I'm the issuer of a bond, if the interest rates drop, if there is, you know what, I'm going to do a refunding, pre-refunding video because I get asked this every like 2 weeks, so it's good. Okay. Oh, okay. So you can stay on till the end. Okay, your second chance, you're going to nail it. I know you are. Now, remember, we have Refunding is I'm the issuer, say I have a 5% bond, interest rates up to 2. What I'm going to do is I'm going to issue a bond at 2%, use that money to pay you off, okay? That's what you're going to do. That's the big thing. Now, a pre-refunding is when it's not callable. I can't do it. So what I'm going to do when rates drop is I'm going to issue a new bond anyway at a lower price. Boom, at a lower coupon. I'm paying you, you guys bought a $10,000 bond paying 5%. I'm paying you $500 a year. Bonds are now 2%. So I'm going to issue a new bond to new people for 2%. So I'm only going to have to pay. Oh, that's funny. The Big Lebowski. I got it. That's awesome. I didn't even think of that. So now, it's funny. Everyone talks about how great a movie is. I actually haven't watched the whole thing yet. That's crazy. I should. So pre-refunding is 5% bond, 10 grand. I'm paying you $500 a year. Rates drop to 2. I'm going to issue a new bond at 2%. I'm going to issue a new bond at 2% to bring in that 10 grand. But I can't pay you off because it's non-callable. So what I'm going to do is I'm going to take that money, put it in an escrow account, and use that money to buy 5% treasuries. And those 5% treasuries, that $10,000 worth of 5% treasuries are paying me $500, which is what I owe you. So I'm going to take that money, the $500 I get, and then I'm going to attach it to you. So now I'm defeasing the debt. So what happens is, as the $500 comes from the treasury, it goes right to you, and we're good. And I lock that off. So the only thing I have to pay is the 2%. Only munis can really do it, because only munis can actually issue bonds with a coupon lower than treasuries to make that money work. I'm going to do a video on it with charts and stuff that'll make it better, probably this weekend after I do my option suitability video. Sandy convinced me to do an option suitability video, and I'm just going to put that out there for everyone. We'll see. We'll see what happens. I don't know. So now, okay, I hope that helps, John. I hope that helped you a little bit, John. Okay, so now, Rule 2165 is the rule on that basically it's for seniors, okay? So if you think that a specified adult or an adult, like a senior, is being abused by like their niece or their nephew who's taking their money from and stuff like that, then you can put a temporary hold on the disbursement. You cannot stop them trading. You cannot stop them from paying their bills, but you can put a temporary hold so that they stop making disbursements out until you figure out what's going on. And you can always extend it if you have to, but that's the rule. It's there to protect people from being exploited by their nieces and nephews and kids and stuff like that. That's why a lot of time you have a trusted contact person, so that you go, if they're kind of out of it or something like that, you can reach out to the trusted contact person and the customer and try to figure out why they're paying this money, why they're kicking out like the money. And that's what happens with red flags. Like you'll see somebody all of a sudden who takes out, like, they never take money out, and all of a sudden they're taking out like $5,000 a week or something like that. Then you ask, what's going on? Well, my niece wants the money and she keeps asking for money. So that could be it. And that's what Rule 2165 is, allowing you to put a hold on disbursements, which means withdrawals. But you cannot stop them from trading. You cannot stop them from paying their bills. You can stop them from withdrawing cash or wiring. And you can do all of it or some of it or whatever it is, just to make sure that they're not getting ripped off. Hope that helps. Now, systematic risk. So there's two types of risk. There's market, systematic, and then there's business, which is non-systematic. Systematic risks are like interest rate risk, market risk, like shit you can't control. It's out of your control. Like, look, if you had owned stock last March, like on March 5th, you'd be all happy. March 13th, 2020, the floor fell out of the market and everyone lost money. Well, it's not realized. Their profits, their assets went down. You could buy Amazon for a song, Google, all these companies, even though they were making tons of money, since the market dropped, they all dropped. You cannot diversify that risk away. So systematic risk is, I don't care how many stocks you have systematic risk, because if the market crashes 20%, everyone goes down. Everyone sinks with that one. That's systematic risk. Okay, interest rate risk is the same thing. Inflation, you can't diversify that away. Now, business risk. That's like you buy a company, it just sucks, okay? Like say you buy Tesla and then Elon Musk says something stupid and the stock drops. Or like you buy GameStop and you realize you shouldn't have bought it at 400 because it's a meme stock, boom, it drops, okay? That's the problem. Also, guys, and a little pitch, don't forget, tomorrow night, Peter Tuchman from Wall Street Global Trading Academy is going to do this weekly wrap-up. He does more technical stuff now. We're going to try to expand it into more central stuff, like global stuff, like just the markets in general. And then I'm going to probably do a video on Sundays to explain some of the stuff he said. Like if it's stuff that's more advanced, I'm going to try to put it in like normal English. But that's what he does. He's a good guy. He's a funny guy. Please watch it. It's awesome. Okay. It'll be, I'll shoot it out on the community tab. So please, if you're on here, subscribe and hit the notification, all notifications, so you get my community stuff. Okay. Now, systematic risk is market risk. Non-systematic is business risk. Okay. Rose, also, if you want, what'll help you is if you go to my playlist called SIE, the book. I know that's not your thing. And go all the way back to the end of the chapter. The chapter 20 is all about investment risk. That may help. Okay. Yep. Okay. Matt, I did not see that. Oh, Scott, where are you? Boom. That's awesome. I was wondering where you were. I was hoping that. So, Scott, that is awesome. So it was easier? Okay. So, Stefano, we'll talk about that in a second. So, Scott, I'm so happy for you because you had great questions, really challenging me on those questions. Are you done now? Scott, are you done? I know you went to bed early Tuesday night. Hope you're done. And then you have, unless you have the 63 to take now. Okay. So Julie, yeah, just keep paying attention. Watch my If You Want to Pass the Series 7 video. Go from there. Also, take a look at some Brandon stuff. He has some solid stuff. Okay. Now, so Stefano, so a Roth IRA, yes, you put money in after tax, which means it has been taxed. So your thing saying it don't get taxed on contribution, you do. When you, again, Scott, I'm so happy for you. I'm going to miss you coming on here if that's your last exam. Okay. Please don't be a stranger. So Roth IRA, you put the money in after tax. That means you pay taxes on the money. Then it grows tax deferred. If you hold it for more than 5 years and you wait till you're 59 and a half or take it out on a qualified reason, then you pay no tax on the earnings. Remember that. So if you put in, if you do a Roth IRA, the money goes in after tax, it grows tax deferred, and then you don't know a penny on the money on the way out. Okay. That's why Roth is also pretty awesome. Yeah, I mean, over the whole long haul, it's not as big a deal versus a regular IRA, but I do think it's better because I'd much rather get a big check with no taxes coming out of it than a big check and have a lot of taxes coming out of it. Okay. I agree. You have to be comfortable with options, and I have those videos on there. Okay. 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 Past perfect. And I'll talk about beta alpha in a second. Okay. Past perfect is solid. They're just a little too deep. Brandon, you got to work with them and get them to go with somebody else. I'm kidding. So past perfect is good, but they go way too deep on the math. So you have to take their math shit with a grain of salt. I just had a girl on who was talking to me. She said she took the test using past perfect. She's at not Wells Fargo or something like that. She had a tough time because she said it looked nothing like the exam. It was like, but some of past perfect questions look like that. And then the answers look like that. It takes you freaking like 10 minutes to get through a question. Like I'm telling you, I took the exam 4 years ago and I got like one wrong. And I can't get above a mid-80s on past perfect. They're just challenging as hell. But I mean, to be fair, I like STC and Achievable better for the 7 and the SIE. I do. And but I mean, if you got to go with past perfect, do it. But maybe what you do, Stefano, is go in here, get the link. Sales pitch. Go in there and get the link and get the Achievable thing as a good supplement. It's fucking solid. It really is. And his videos are solid. Okay. Now, yeah, by the way, it sounds like I'm in love with Brandon. I'm not. I just think he's really good at what he does. Okay. It's like a bromance. Okay. So now, yeah, you don't have to remember something with your scores and the mastery exams and the midterms and all that are tough. Okay. Like the green light for STC, the green light for, I think they call it a mastery exam for Kaplan. They're tough. A lot of people don't even pass them. They don't. Okay. My dogs are coming up here. Okay. So now, okay. Rose, beta and alpha. So beta beta is basically how you do versus the market in general. So if you have it's a multiple, think of it as a multiplier. So it's looking at the volatility of your stock compared to the market, how it correlates. There's not correlation. It's just how it goes. So if you have a beta of 1, you're going to move with the market every time, right? So if you have a beta of 1, you go, okay, the market goes up 10%. I'm going to go 10 times 1. My portfolio or my stock should go up 1% also. I mean 10%. If I have a beta 1.5, I multiply. So beta is if the market goes up 10%, my multiplier is 1.5. 10 times 1.5 is 15. So I am expected to do 15%. If the market goes down 5% and I'm a beta of 1.5, I should go down 5 times 1.5. That's 7. I think that's 7.5. So I should go down 7.5. That's all it's doing. So if you have a beta more than 1, you should be more volatile than the market. If you have a beta of less than 1, you should be less volatile market. Weird that Thursday is more popular than Tuesday. Okay. So now, usually it's the other way around. Alpha is what you do in excess of that. So alpha is where you add value. So beta, say you have a beta of 1.5 and the market goes up 10%. You should go up 15, right? That's your expected. But what if you go up 17? If you go up 17, you did better than expected. So that's 2 points of alpha. Okay. So alpha is how you do against a specific group of securities or how you do against your expected return. Are you adding value? And Cynthia, thank you for coming on. And Kelsey, I am so happy you guys came on here. We're going to get this shit done. So, and Kelsey, if you see a Mark come on here, sometimes he comes on, he's the one to reach out to. That Mark is the one to reach out to that had the same situation as you did. So work on that. Okay. I hope that helps with the alpha and beta, Rose. Okay. Okay. Yeah, guys, I'm telling you, when you're practicing, I would always do at least one test every few days with a mask on, unless you're going to do a remote. Until they say otherwise, assume there's a mask. Look, at worst that happens, you practice with a mask, your family makes fun of you, your friends make fun of you, but you're ready for it. And if they say no mask, then you're much better off, okay? So I think that's kind of where it is with the mask. Right now you have to wear a mask. Some people like remote, but again, one of my students, I got to find out what happened. This guy, Chris Bryan, one of my students, he went to the remote and they cut out in the middle. He had to do it. Then it happened again 3 days later. And now he's actually going to the center to do it, which he didn't want to do because he's a little worried about the COVID, but it's just crazy. It's just crazy. Remote is fine for the SIE, the 63. Do not do it for the 7. And maybe one student did it for the 79 and he said the math was a little lighter, but it's hard to do math when you can't type shit. Okay. Right, I agree. So Scott, if you're still on here, I was thinking that your questions were deeper than the exam. Okay. Oh, so Scott, you took the 65. I love that because Kelsey's taken that. She's doing the 63, 65 route. Okay. So now, okay. Any more questions? Did I miss anything? Yeah, Ruben, you're right. The STC green lights are a pain in the ass. Okay. Ginger, I love it. I have a few people that freaking love Achievable. They love it. And if you like it, go in the thing. Helps me out. Okay. Okay. Also, guys, if you want the options, you can either go on my website and buy them and download them. They're like 10, 15 bucks each. Or you can go on here, pay the membership, and get one access to the options videos. Plus, the ones, if you're in the 24, the 99 one, the 99 one gets like a once a week personal session. But the 24 gets that every Monday at 3 p.m. I do a members only Zoom call. And right now it's just Sandy and I talking to each other. Okay. Am I pushing that enough? Okay. ACATs. So let's talk about ACATs. Okay. ACATs are account transfer stuff. That's called the TIF, a transfer in form. I always forget the TIF, transfer in form. Okay. So an ACAT is this. I'm going to move from JP Morgan to Schwab. I go to the Schwab person and they go, oh, sure, here's your form. I fill out all my securities, all the securities that I have. This is ACAT. I fill out all the securities that I have over at JP Morgan. Sorry, JP Morgan. Now, Schwab will send the form over to JP Morgan, who then has 1 day to verify it. If they have any problems, they have to tell it right now. And then once they verify it, this is where you're going to get a question. Once they verify it, they have 1 day to verify it. Once they do, all my orders have to go through the new firm, Schwab now. All of them do. And JP Morgan has 3 days to deliver the shares. I really thought when they went to T+2, it would drop to 2, but it didn't, which is weird. So they have 3 days to deliver all the shares. If they have, the one thing that can't be delivered are things that, like if JP Morgan has a proprietary, their own created thing that can't be transferred, that would not be transferred. And then you have to figure out what you're going to do. Either leave it there, sell it, destroy it, whatever it is. Okay. So that's an ACAT. ACAT is an account transfer form. It's for securities. it's kind of like the easy way version of a 1035 exchange, right? So a 1035, it's not exactly the same, but like insurance products, if you have an insurance product at Northwestern and want to move it to either somewhere else in Northwestern or to like Travelers or something like that, you would do a 1035 where you can take out of the insurance product and get into another without paying taxes. It's not the exact same thing, but it's the same mindset. You're moving something to somewhere else. So again, an ACAT, 1 day to verify, 3 days to deliver. Okay. Yeah, Matt, I agree. 100%. Steven, convertible preferred stock, you mean? Okay. Okay. So so Scott, what about the CFP? I don't know. Does that make, I mean, you can do the CFP, which is a big one. You get the CFA, which is a bitch. And do the, I mean, there's some good ones out there. I mean, Brandon may know, he may know more. I don't deal on that side of the market. I haven't done it. And he's been at Fidelity, so he knows. Okay. First of all, you're right, Matthew. Sometimes they will give you what I call the Fred answers. And I apologize if anyone here, his name is Fred. But I get, they're just the ones way out there that means nothing. And you have to feel comfortable that it's not that. Okay. Okay. Stefan, not the other one. Stefan asking about convertible stock. So I assume you mean convertible preferred, which I do have a video on that. Okay. Well, hold on. Before I do it, yeah, both. You can do it as many times as you want, but you can take it 3 times. And then you get 30 days, 30 days, 30 days. After the third time, you have to wait 180 days, which is 6 months for us morons. Okay. So, and then that's the problem with the 70. They give you 3 shots. And then after that, every 6 months. Now, what's interesting is if you go 2 years without taking the test, then it resets back to the 30, 30, 30, just so you know. So anyone who took it like a year and a half ago, year and 10 months ago, if you're watching this, wait the month and take it when after it's been 2 years since your last exam, not your first exam, since your last one, because it's all reset. Now, convertible preferreds, okay? So let's talk about the suitability first, okay? So convertible stock, there is no such thing. It's called convertible preferred or convertible bonds. Both of them are kind of the same thing. Convertible preferred has a par of 100. Convertible bonds has a par of 1,000. Convertible stock turns into common stock. See, I even said it. Convertible preferreds turns into common stock. And what happens is, this is the way you do it. They're going to give you a bunch of numbers. And the first thing you're going to do, if you have to find out how many shares you get if you convert, that's called the ratio. So the ratio is you get par, whether it's 100 or 1,000, divided by the convertible price, which they will give you. So let's say I have a bond trading at 104. I hope I remember the numbers. And it's convertible at $25 a share. They may say, what's parity? So I'm going to do 1,000 divided by 25. That gives me 40. And then that's my ratio. That's how many shares I get. Now, I either divide the market price of the bond by the 40 if I need to find a stock price, or I multiply the stock price times the 40. Okay? That's the way it goes. Okay? I either do that, I either do multiply the ratio times the stock, or I divide it from the bond. I like it. Okay. So now, hope that helps a little bit. And the thing is, remember this one. I always joke around. If you see convertible in a choice and you really or truly have no idea what to pick, go with convertible. That's what I do every time. If I'm not sure, I go with convertible. Remember, convertibles are the most volatile of all bonds. Okay. Okay. So here we got an options question. Oh my God, Ken's doing an option question. Okay. So now, the purchase of 200 shares of HGF at 45 and the sale of 2 HGF 50 calls at 3 could produce all of the following except. So again, I buy 200 shares of HGF at 45 and I sell 2 HGF 50 calls at 3. Let's go through this. I'm going to go through it very quickly, how I would do this. First of all, I have to get to break even. That's what I would do. So the break even would be, so if it's the same, you add. If it's different, you subtract. So let's see. I bought stock and I sold an option. So it's a buy and a sell. I'm going to subtract. Remember, it's stock. Break even is stock plus or minus the premium. So the stock is 45. I sold calls at 3. The amount doesn't matter. The amount of contracts or shares, I didn't matter as long as they're the same. So I'm going to do 45 minus 3. So my break even is 42. So that's my break even is 42. Okay. Now, I have a break even of 42. So I write that down. I'd write down 42, put a little star next to it. That's my break even. Everything's based on the break even. Everything above or below the break even is where I make or lose money. Now, what's the next step? I put the strike price. What's my strike? 50. I'm going to place that above the break even. So now so you're going to have 40, you're going to have 42 written here and 50 written up here. Okay. Now the next question is, am I bullish or bearish? Well, I bought stock. I'm always bullish. If I short stock, I'm always bearish. So I'm going to do bullish. So I'm going to put an arrow up next to the 42 on the break even. So I now should have 42 written, an arrow up, and the number 50 up here is my strike price. Put a line by the 50 to remind me that I never go past that strike price. Meaning that if the stock goes above 50, I don't really care. Whatever I made from 42 to 50 is locked in. So if it's at 42 break even, bullish, trading at 50. If the stock goes to 44, I made 2. The stock goes to 50, I made 8. If the stock goes to 90, I still only make 8 because I stopped counting at the 50. So my max gain is 8 on a covered call this way. Now going down, if my break even is 42, if the stock goes to 40, I lose $2. It's all about pictures, people. Stock goes to 42, I lose 2. If it goes to 40, I lose $2. If it goes to 32, I lose 10. It's always from the break even. That's my zero. Remember that. That's my zero. If the stock goes to 0, 42 down to 0, I lose $4,200. So I'm just saying that's how kind of I do them. They're a little better with the screen to show you, which is on my videos. But that's kind of how I do options. So covered call, I have a limited gain and a big loss potential. Hope that helps. Okay. Now, and I know I rattled it off, but that's, again, I'm big on the way too fast. Okay. Okay. Boom, boom, boom. Yep. Linda, how are you? I know you called. Let's call me tomorrow. I've been teaching straight through. I haven't had a chance to talk to Linda. Give me a call tomorrow. Okay. John, I need a little more information. Managed versus non-managed offerings. I don't know if that means managed. I don't know if that means for mutual funds or not. That's maybe need more than that. Okay. Okay. Execution errors. Okay. So now, there are two types of errors. There are reporting errors where you give the person the wrong price. Like your customer calls up and she buys 1,000 shares at 40, and by mistake just told her she bought it at 39. That's a reporting error. You call her up and say, listen, by the way, I told you the wrong price. You got to take the 40. I apologize. Okay. Now, so if I report the wrong price to you, I just call you up and say, by the way, I gave you the wrong price, and boom, we got to fix it. You have to take it. An execution error is on me. Okay. So let's say you give me an order to buy ABC at 40, and then I buy IBM at 40. So that's an error. That's my error. That's my fault. Or let's say you say buy 100 shares at 50 and I buy it at 51. Again, that's on me. You have to make that up to them. Okay. So if they would have bought their stock based on their order, remember, if they give you stock to buy at 40 and it never traded there, you don't owe them shit. You just have an error and you're going to lose money on that. But if they say buy 100 shares at 40 and you bought the wrong stock at 40, and they would have bought their stock at 40, not only do you have to sell out the stock that you bought by mistake, you have to sell them stock at the price that they said they would have bought it at, because they were entitled to it. So if on an execution, if they gave you an order and and they should have bought or sold it, you owe them the price. Sean, boom! I'm so happy for you. See, it's freaking ADD. You guys got to deal with it. Okay. So now, Sean, I'm so happy for you. That's awesome. Get the SIE done. Now for the 63. 63, read the damn book. Read the damn book once or twice and go there. And I agree, Zach, STC for the 63. Now, I think that works. So an execution error goes in an error account, not the rep's error account, the firm's error account. The rep may have to pay for it, but it is in the firm's error account and they have to make it up for it. And holding a reporting error is not on, you're going to get in trouble, but you do have to tell them. Okay. 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 So the 7 pay test. Okay. Diane, we got this. Okay. So let me talk about the 7 pay test, Julie. Okay. So they're not going to make you figure out the numbers on it, but they do understand that the 7 pay test is basically saying, did you overpay your premiums or something like that based on what it would, like, overpay the premiums, what would have normally been paid in 7 years. So the problem with the 7-pay test is if you beat that, it becomes a modified endowment contract, which means it's what they found out that people who made a lot of money were banking all their money into insurance premiums and hiding it. Because remember, if you die in an insurance product, it's not taxable. So the tax codes change. If it becomes an MEC, modified endowment contract, because it violates a 7-pay test, then all of a sudden that growth becomes taxable in some point. So the whole point, like you have these millionaires putting their money into life insurance so that when they die, the money passes tax free. So they found out. So the IRS goes, wait a second, that's really big. So now they do this modified endowment contract, where if it becomes a modified endowment contract, even if you try to underpay and pay it back, it doesn't matter. Once it's an MAC, it's always an MAC, which means when they die, it's taxable. Hope that helps, Julie. Okay. Stefan, why would I do it? Why would I do a butterfly or condor when it's not in the exam? That's the problem with Past Perfect. Okay? That is the problem with Past Perfect. Because they do shit that's on there that is not on the test. Okay. 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 So, well, thanks you, hiking. So let me catch up. Okay. Yeah, the 2-year thing is big. So hiking. So in reality, I like Achievable, I like STC, I like Kaplan, I like Notman. Past Perfect's fine. They give you a lot. Okay. So and I'll say the same thing. I'm going to give you this. I actually do 2 videos where I review all the vendors. But look, you can't go wrong if you have Achievable, STC, Kaplan, Notman, and especially for the SIE, Past Perfect and training consultants. When you get to the 7, it's still Achievable, STC, Kaplan, Notman, and Past Perfect. The problem with Past Perfect is Past Perfect absolutely overprepares you. STC, all of them in some way, with anything with options or margin or anything mathy, they all overprepare you for whatever exam it is. I don't know why they do it. They can't. I think they're just afraid of not giving you hard enough exams. So understand, if you're doing okay on options and okay on margin, you're thank you, Diane. I like that. So if you're doing okay on margin and okay on options on the vendors, you should be fine on the real exam. Okay? Fine on the real exam. So hiking, I'm hoping helping you. STC is awesome. I like them. I have a link for them, get a discount. So I do like them. But in reality, if you do Kaplan, if you do Notman, if you do STC, Past Perfect, Training Consultants, Achievable, all of them are fine. Achievable I like too, because it's freaking cheap as hell. I mean, you're talking, so even if you have Past Perfect and it's too much, because Past Perfect is absolutely too much information. But if you can pass their exams, you're going to destroy the test. It's just the way it is. But the problem is they go so deep into stuff that sometimes you get you start focusing on the wrong stuff instead of what you should learn. Okay, you start working on the math and you start doubting yourself. Like I'm telling you, I do the Past Perfect and I get mid-80s and I destroy the actual exam. So hiking, I hope that helped. And please come on and join the lives as much as you can. Okay, hope that helps. Okay. And Stefan, I'm not doing the Iron Condor. You know that. Okay. 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 Oh, that's funny. It is. Oh, so are you at hiking? Are you at Edward Jones? I think Edward Jones gives it 3 weeks. Okay. Yeah, I think look, if you guys get 80 banker, probably get sued. Don't use them. Please get a supplement. If you have 80, look, listen, guys, I'm telling you, Past Perfect is fine. It is what it is. I got a lot of people doing it. It's just they over prepare you. They do too much. So take it with a grain of salt. Okay. Okay. Cynthia, thank you. But I'm in a truce right now, so I'm not going to do anything. Okay. So now, okay. So let's talk about. I'll come back to that one, John. I'll handle that on Tuesday. So TPP taxation. Don't sweat it too much. Understand, whenever you buy in a limited partnership, it is limited. It is limited. It's what you can do. So it's all called passive taxes. So if you make money in a limited partnership, it is passive income, also passive losses. So any money you make is a passive income. It gets taxed like ordinary income unless it's a capital gain, but any of the losses are considered passive. Now, normally when you have a loss on a capital gain loss, you can use it to offset capital gains and up to $3,000 of your income. Passive losses cannot be used to offset anything other than passive gains. So passive losses cannot be used to offset anything other than passive gains. Okay, remember that, okay? Also, guys, anyone taking the 66 or 65, remember, I have that new video out there. New, it's like 3 months old, maybe 2 months old. It's all called the Series 66 Quick and Dirty. It's all the portfolio management stuff for the 65 and the 66. And I've been getting good feedback on it, and free is free. Okay, so now, yeah, I do like my option stuff. I think it's a game changer. I think I do it differently than everyone else. Everyone uses T-charts and all that stuff, and I just don't. I don't really use acronyms because I think sometimes you get screwed up. Like somebody tried to say use silo for spreads. I have no fucking idea what that means. Okay. Okay. Yeah, go hard on the studying. That's fine. Look, all of you who do Past Perfect, just go at it hard, and then remember anything that looks. If you see in the answer thing, oh, this is tricky, it means it's not an exam. So Diane, if you see butterflies or condors or really crazy option questions, take it with a grain of salt and don't worry about it too much. Look, and another vendor, it's pretty good. I think at least for the 60 exams, Brian Lee's videos are pretty solid, and he's not expensive. I mean, I think he's under $100 for that stuff. Okay. Ma, is it on the SIE or the top off you're talking about? Okay, I can do that. So, and Rose, I hope I helped you with those answers. Okay. Oh, the SIE, if you get 2 option questions, you're going to get most. So you can even watch my one video where I talk about options. It's the free ones. You don't have to pay for this shit. In the SIE book, that'll help. So that's the other thing. So anyone taking the SIE, find my playlist called SIE book and just work through it. That's the whole, there's a book. It's the STC book, okay? I'm not reading it word for word, but I'm explaining what you need. So it's a great, so if you have STC or buy STC, you can go along with it. It's awesome. Or you just don't and you watch it for free. But the option stuff in there is what you need to know. It's not that hard. On the SIE, it's not hard. On the 7, it's harder. But unless you're taking the 6, then don't worry about it. Okay. Yeah, Julie, I like STC too. Oh, great. Okay. Yep, I know. I knew that Everett Jones is a 3.5 thing. That's why I have a lot of my students who know they're going to go there. I have one of my students, I had her take the SIE, like start studying weeks before she started. So this way she could walk in and take it. I actually think she took the SIE before she started. So it kind of threw them off a little bit, but then they gave her an extra few weeks. Okay. Now, John's asking about depreciation versus depletion. Also, guys, if you're confused, if you're watching this tomorrow, which is today and tomorrow, I don't know who's on first, I don't know. But if you're watching it on Friday, I think there's a way to turn the chats on so you can actually kind of figure out what the fuck I'm talking about. Okay, so now, depreciation versus depletion. So when we have when we make money, sometimes there's costs involved. So it's either depreciation or depletion where we can reduce what we pay taxes on. Guys, if you've ever done your own taxes, right, you know you get to write shit off, okay? So you get to write stuff off on to lower your income. Like I have a lot of charitable stuff. Like all you guys right out of college, right? I'm sure there's clothes that you wore in college. There's no freaking way you can wear now in public, right? Because it's wrong. So donate them and take the write-off and you can reduce your income. That's what depreciation and depletion is, okay? Now, if I so let's do it this way. So depreciation is like if you have man-made shit. So always think depletion is for God-made shit. Depreciation is for man-made stuff, okay? Shit. So now let's say you have a truck. Say you buy a truck and you're running a business. And now say it's a $10,000 truck and they say the life of the truck is 10 years. You're allowed to write off. You're allowed to depreciate the value of the truck to reduce your income. So if $10,000 truck, yeah, who finds one that cheap? It's 10 years till the life of it. So you get to write off 10,000 divided by 10, $1,000 a year you get to use to offset your income. So let's say I make 20 grand 1 month tutoring, but I have my Suburban and I have another car that I'm paying, and say they're 40,000 each, and it figures it's a 20-year lifespan. So maybe what I could do is take the 40,000 divided by 20, and every year my taxes write off that amount. So what is that? $500? Oh no, it's 2 grand. So I could write off 2 grand a year off my income based on the depreciating value of the product that I have. So I have a truck, or I have a car, or I have a building, whatever it is. Every year you own it, it's worth less and less because you're older. The IRS lets you write that shit off. That's depreciation. Okay. Now, depletion is for let's say you have, it's kind of the greatest write-off ever, other than depreciation. Say you're drilling for oil and you have found a thing of 100 barrels, and it wouldn't be much, but let's say it's 100 barrels. And then you pull out a barrel and you sell one barrel. Well, you get to write off the fact that you just lost 1% of your pool of oil. So you get to sell something and then write off that you can't sell it again. So anything that's a non-recurring resource that's made by God is depletion. Okay, depreciation is for man-made stuff, and depletion is for God-made stuff like oil, gas, coal. All the things you pull out of the ground and sell. Since there's less of it in there, you get to write that off. So crops, no, because crops come back. By the time you sell the thing, there's new shit coming out of the ground. Lumber, yes, because it takes a generation, 30, 40 years to grow back. So like lumber, if you chop down, like 400 trees or whatever it is, you get to write off the fact that there's 400 trees less in there. Even if you plant, which you should be doing, planting right away, it takes 40 years for the trees to get back, if not longer, so they'll let you write it off. So depreciation is the value, your regular man-made assets going down in value, and you get to write that off your taxes. It's called a loss. Depletion is the same thing, but as you sell products that you can't replace, you get to write it off. Okay. Boom, I love it. Yeah. See, I think if you use, I'm a big fan of using multiple vendors. Yes, if you can get it for free, get it for free. Find them. If you can get it for free, that's awesome. But if you can't, drop some cash. That's why I like Achievable, because even if a lot of you guys get the shit sent to you, right? You come in there and they hand you the SEC or the Kaplan books, Notman or Past Perfect, depending on what it is. You get the classes, all that stuff. So I should start getting some of the people who came out of college doing these classes during the week. And it's really good to get a jump on it. So any of you guys in the analyst programs where you just got out of college and you're starting, where they bring you in there. I don't know if they're doing it in person yet, but they have you come in and learn Excel and all that crap. Start studying on this stuff now, because the sooner you start, the better it is. And again, use other sources, even if you use Investopedia, which I don't like. By the way, if anyone knows anyone at Investopedia, they do this. If you look up and I did that, Julie, go back in the beginning of the video. In the first 5 minutes, I did a lot of shit on technical. So if you didn't see that, go rewatch that tomorrow. Okay. Oh, I'll get to you, Sean, in a second. So, the whole point, where was I in this shit? Okay. So if you type in what's the best stuff, there's a stupid Investopedia article where they list ExamFX as the best. What the fuck? That is ridiculous. They're not even, look, there's 10 vendors I know, they don't even make the top 10. Okay. Same thing with AD Banker. They should be, what you should do with ExamFX and AD Banker. Now, let me explain something. If you can't afford it and all you're taking the SIE and the 6, you could probably get past it, but you really need to use some supplemental stuff. Either it's Achievable or go to Investopedia or watch these videos, whatever it is, you need to go on and do more shit, okay? But really, if you have a choice, you take it, you put it in the yard, put it in a big can, light it on fire, and don't let the smoke hit you, because it will make you dumber, okay? So stay away from them. Okay, now back to your Sean. The SIE is good for 4 years, but if you have the 6, yeah, perfect, Ruben. Look at that. I love it. Ruben knows his shit. So as long as you're employed and registered, the SIE stays. But let's say you decide to leave and go out and just leave the business. The 6 will end after 2 years, but the SIE will last 4 years. Okay. Hope that helps, Sean. Okay. Okay. So, no. So, Cynthia, so Edward Jones gives you 3.5 weeks per test. So when you start, and they pay you, remember, they're paying you to study. So it sounds horrible, but they're paying you to study all day long. So it's on you to do this. So you get 3.5 weeks for the SIE, 3.5 weeks for the 7, and then I think 3.5 weeks for the 66. I'd rather them do, I don't even know what they should probably, I don't know, they came up with 3.5. It's just pretty funny. But their idea is that, yeah, I think you only get one shot unless you're really close and you go. Yeah, so unless you get really close and your manager really likes you and you think you can bring in clients, then they'll give you another chance. But the good thing is anyone who's on here who's not registered yet, God damn it, get your SIE, get your 66 done before you even start. So then you got one freaking test. And you can slap that shit on your resume. Not that it's huge, but it's more than not being on there. And it shows that you're aggressive. And this shows you can pass a fucking test. And if you can't pass the 66, right, because you're not working for a broker dealer. Yeah, it's not the state, it's your firm. Remember, the state doesn't control the 7, FINRA does. So you have to work for a FINRA broker-dealer who's doing securities that needs it to get the 7. Don't worry about it. You got the 6. Do your shit, earn your money, start making big money, then move to a place like, if you have clients and shit like that and you have an income coming in, then it's worth going to a Northwestern or something like that. But it's because there's no pay. I mean, there's no salary. But then maybe you can go to like a Merrill Lynch or Morgan Stanley with your clients if you get a big enough book. So don't worry about it. Don't sweat it. You got the 6. You're good. Once you're done with everything, I think you're done with everything now. Boom, you can start earning, and you can make a lot of money. Trust me, a lot of people. I'm in Chatham, which is not a poor fucking town. A lot of these people sell insurance. They're not always, they're not starting out, but after 20, 30 years of doing the business, you're making money because constant money flowing in. It's like an annuity once you get these people into the insurance. Okay, again, Edward Jones, I think is great. I think they're tough, and I think getting into a business where you have to make phone calls and hit quotas is tough. But I mean, I'm hearing a lot of good stuff about Fisher, but it's like it's like really hard to get into. But Fisher Investments, they don't make you hit quotas, which is great. Okay, tips to get back. So I say, put in your calendar, just put in your calendar an hour a day. Just try that. Do an hour a day. Find an hour. Put it in over the next 5 days. Put in your calendar an hour a day, and maybe just watch videos instead. I don't mean mine. Yeah, I want you to watch mine. Of course I do. But what I'm saying is maybe just watch videos just to get it warmed up, get in the mood. Don't take any quizzes. Kind of do casual. And then once you got through the videos, start reading the book. I think that'll help. I think you got to start baby steps, or you can just kick your ass and the only thing you can do is set a date or the test and then put the pressure on you. That works. So again, guys, if you like what I'm doing, boom, hit the like. I love you guys doing this. This is always fun for me to do. And if you like, I have a bunch of links down there. You can get books, you can get Amazon. Hey, click on there, go on Amazon and buy some Christmas gifts for your friends. Okay. Because then I get like 10 cents for every $100 a day. Woo, 10 cents. Almost might be a beer. Okay. Yeah, SDCs are sometimes boring. But most of them are okay a little bit. I have videos on that. And as somebody said, I decided I'm going to start doing the Series 7. Since I've kind of done the 63, 66 stuff, I am going to, hey, Paul, how are you? That's awesome. I would avoid it for the interview, and then if they like it, then bring it up. Because they're going to check it out. You can't lie about whatever's going on. But I do think that leave it out for the first ones, get them to like you, and then tell them. But find out, make sure that you're not, disqualified. As long as you can work, then you're fine. Okay. So you got that. You passed the 66. I love that. Oh, that's right. Because you were taking the 65 to undo it because you don't have this. You can't get the 7 yet, right? Okay. I got it. And the SAE lasts for 4 years, which is a good thing. Okay. Oh, Paul, you don't have to do that. I appreciate it. Thank you very much. Okay. That's awesome. I love that, Paul. Sean, I love that. Thank you very much. That was nice of you. Oh, yeah, Paul, you're taking that on the 20th. I thought you were taking it this Saturday, whatever it is. July 4th. That's interesting. Sean, I love that. So what I do want you to do is, as you're done, I want you to come on and tell us what's going on with this, right? So keep us up on what you're doing. I like people coming on here and talking. Guys, don't forget, every Friday, after you pass the exam, you don't need to unsubscribe. I'm begging you. Because every Friday I'm going to do this Wall Street wrap-up thing, and everyone's going to, learn a little bit about the markets, what to do, and go from there. And I love it. Guys, I'm going to head out because there's a cute guy walking around before he goes to bed. I want to at least see him. I haven't seen him all day. Everyone, yeah. Oh, no, yeah, I agree. Training consultants, look, Tina knows her stuff, but you need to get past. The problem is what I tell people to do is speed the videos up. Do them 1.5 times, and then you can handle her voice a little bit better. Look, their videos cover the whole book, which is awesome. Okay, guys, thank you very much. I'm going to, Sandy, I'm going to try to answer your things tonight on the videos. Okay. Okay. Yeah, I think it will. It'll be fine, Paul. You'll be going to rock this. Again, Sean, that is really, really nice of you. I appreciate it. I don't do that for this. I do the tutoring to make the money. I'm doing this to try to give back a little bit. Thank you, Sean, so much. I will say hello to the little man as soon as, hopefully get him before he goes to sleep. How to get rid of test anxiety? You have to, I don't know, smoke weed. Seriously, I'm kidding. Some people use melanin, whatever the hell it is. I would say the easiest way to do it, if you're get in bed, turn the light on, print out either the crunch time facts or something like that. And yeah, exactly. And just warm milk, turkey. But really get in bed, put your head on the pillow, one light, and start reading customer accounts in the paper. But do it so you'll fall asleep. You will fall asleep if you do that. If you read, and even if you stay awake for 30 minutes, you're reading. So read customer accounts on your head on the pillow, and you want it to fall so that you'll go to bed, okay? So take it out of the binder so when it slams, it doesn't wake you up. And look, if you fall asleep at 11 o'clock from doing that and you wake up at 4 in the morning with papers all over the place, that's awesome. That's what I want to hear. God. Yeah, I know. I'm not a fan of that. If you've never done it before. CBD, man. Okay. Anyway, guys, so the test anxiety, I don't know what to say, but do try to read yourself to sleep. I do that all the time. Basically, half the time I fall asleep watching Netflix, and I miss half the show, so I got to go back. Okay, guys, thank you very much. Thank you for joining. I almost got an hour out of this again. My voice is going to die. I've been teaching since 11, so I want a break. I'll see you guys. Have a great weekend. Sean, again, that was super duper nice of you. Keep us posted on what you're doing. Really, come on and join it. Just talk. Just come in and listen. Okay, everyone, have a good night. And all you guys who passed, Eric and Georgiana and Scott and oh my God, there was another one who passed. Shit. See, I'm getting old. I can't remember. And Sean, I love it. I know because I was just talking about you. Guys, congratulations on the pass. All the ones you missed or studying. We're going to do this. Get some sleep. And Lebowski, that's right. You guys remember the Big Lebowski, Matt. Sorry about that. Everyone, have a good night and wash your hands, babies.